Attributable earnings, key concepts and implications, exploring profitability metrics for shareholders and investors. Agenda items, introduction to attributable earnings, calculating attributable earnings, implications for investors, attributable earnings and financial statements, challenges and considerations. Introduction to attributable earnings. Attributable earnings defined. Attributable earnings refer to the profits available to equity shareholders after accounting for expenses and taxes. Importance for investors. This metric helps investors evaluate a firm's profitability and overall value in the market, guiding their investment decisions. Difference between attributable earnings and net income. Understanding net income. Net income represents the total earnings of a company, calculated after all expenses and taxes have been deducted. Defining attributable earnings. Attributable earnings focus on the portion of net income that is directly linked to shareholders, highlighting their stake in the company. Importance for investors. Understanding the difference between net income and attributable earnings is crucial for investors analyzing a company's performance. Key stakeholders interested in attributable earnings. Investors' interest. Investors focus on attributable earnings to assess the potential return on their investments and to make informed financial decisions. Analysts' evaluation. Financial analysts analyze attributable earnings to understand company performance trends and provide insights to stakeholders. Management strategic planning. Company management relies on attributable earnings to guide strategy, operational decisions, performance assessments. Components of attributable earnings. Net income calculation. Net income represents the total profits of a company after all expenses are deducted. It is critical starting point for calculating attributable earnings. Preferred dividends impact. Preferred dividends are payments made to preferred shareholders, before common shareholders receive their earnings. Subtracting these dividends is crucial for accurate calculations. Earnings for common shareholders. Attributable earnings reflect the earnings available to common shareholders after obligations to preferred shareholders are met, emphasizing its importance in financial reporting. Common accounting methods used. Accrual basis accounting. Accrual basis accounting recognizes revenue and expenses when they are incurred, regardless of cash flow. This method provides a more accurate financial picture over time. Cash basis accounting. Cash basis accounting records revenues and expenses only when cash is exchanged. This method is simpler but may not reflect the true financial position. Impact on earnings reporting. Different accounting methods impact how earnings are reported and perceived by stakeholders, affecting decision making and financial analysis. Example calculations. Understanding attributable earnings. Attributable earnings represent the portion of a company's profits that is allocated to its shareholders. Components of calculation. Calculation involves various components such as net income, expenses, and shares outstanding that contributes to the final figure. Practical example. Practical example will demonstrate how to perform the calculation step by step, enhancing clarity and understanding. Implications for investors. Attributable earnings definition. Attributable earnings represent the net income assigned to shareholders, providing insights into a company's profitability. Performance evaluation. Investors rely on attributable earnings to assess a company's performance trends over time, guiding investment decisions. Investment strategies. Understanding attributable earnings helps investors formulate strategies that align with a company's financial health and potential growth. Impact on stock prices. Positive earnings impact. Positive attributable earnings can boost investor confidence, leading to a rise in stock prices and market valuations. Negative earnings consequence. Negative earnings reports often lead to decreased investor confidence, resulting in lower stock prices and potential market declines. Importance of earnings metric. This relationship highlights the critical role of attributable earnings in influencing stock prices and market evaluations. Influence on investment decisions. Role of attributable earnings. Attributable earnings serve as a crucial indicator for investors, guiding their decisions on where to allocate their resources effectively. Impact of high earnings. High attributable earnings can attract more investments, signaling confidence and stability in a company's financial health. Consequences of declining earnings. Declining attributable earnings may lead investors to reconsider their positions, increasing the risk of divestment and instability. Presentation and income statements. Understanding attributable earnings. Attributable earnings represent the net income attributable to shareholders and are crucial for assessing a company's profitability. Income statement presentation. Income statements format allows for clear identification of attributable earnings, enhancing transparency for stakeholders. Significance of visibility. The visibility of attributable earnings helps investors make informed decisions regarding investment and company valuation. Notes and disclosures. Importance of notes. Notes and disclosures add context to the financial statements, detailing the adjustments made to earnings. Investor understanding. These disclosures help investors grasp the rationale behind adjustments, promoting informed decision making. Transparency in reporting. Providing clear notes ensures transparency in financial reporting, fostering trust amongst stakeholders. Comparative analysis with peers. Purpose of comparative analysis. The primary purpose of conducting a comparative analysis is to evaluate a company's performance in relation to its peers, helping investors make informed decisions. Attributable earnings insights. Attributable earnings provide a clearer picture of a company's financial health by focusing on earnings directly linked to shareholders, enhancing performance evaluation. Investor decision making. Insights gained from comparative analysis can guide investors in making better decisions regarding investment strategies and portfolio management. Common pitfalls and errors. Overlooking non recurring items. Investors often fail to account for non recurring items, which can distort the true earnings picture and lead to poor investment decisions. Misinterpreting accounting practices. Misinterpretation of accounting practices can lead to significant errors in the analysis of financial statements, affecting investment strategies. Impact of accounting standards and regulations. Changes in standards. Changes in accounting standards can alter the calculation of attributable earnings, affecting financial reporting practices. Impact on investor perceptions. Revised accounting regulations can influence how investors perceive the financial health of a company, impacting their investment decisions. Influence on financial reporting. Accounting regulations shape how companies report their financial performance, ensuring transparency and consistency in financial disclosures. Future trends and developments. Evolving financial landscape. The financial landscape is constantly changing, requiring investors to adapt to new trends and developments. Attributable earnings trends. New trends related to attributable earnings calculation are emerging, affecting how investors assess financial performance. Importance for investors. Staying informed about financial trends is crucial for making informed investment decisions in a rapidly changing market. Conclusion. Importance of attributable earnings. Attributable earnings provide insights into a company's financial health, impacting investment choices significantly. Factors influencing earnings. Multiple factors, including market conditions and company operations, affect the calculation and interpretation of attributable earnings. Investor vigilance. Investors must stay informed and vigilant to make sound decisions based on attributable earnings and other financial metrics. Thank you.